Okay, great. Then why don't we begin? It seems to be the top of the hour right now. And I want to thank you all for attending. Thank you to all the people for taking the time out of their day here to come and see a great presentation. I also want to thank the good people at FX3 for helping me put this together and for allowing me the time to give the presentations. I give monthly presentations to all of you, and I know it's helped a lot of people. It's also helped us as Specialist Trading, so I want to thank all the good people at FX Street as well for giving us the opportunity. Now, Specialist Trading, we feel, is your premier online source for education in trading the Forex markets, as well as the stock and E-mini, but we really feel we give you a lot of great methods and strategies for trading the Forex markets. Many of our strategies, tips, and techniques that we promote and that we supply our members with are making all-time highs in their progress and with the signals that we generate. But first and foremost, we are an educational company. What we really want to do, rather than just give you signals to trade off of, I know a lot of firms and a lot of websites do that, we really want to teach you how to see these signals and how to notice and spot them on your own, so that once they're generated, after you have all the education we supply you with, you'll be able to spot these on your own, and you won't have to rely on signals that are generated or seeing what someone is doing in a trading room or a chat room. You'll be able to empower yourself with your own trading. We feel that so many traders really make a large mistake in putting too much importance on outside sources to give them their information on whether to go long, whether to go short, which currency pair to buy. What we do with Specialist Trading is we provide you with the tools, the insights, the wisdom, and trading strategies that I've acquired from the floor so that you can really do this yourself. It really takes anywhere from 3 to 6 months to put this all together once you become a member. But then after that, even though you still have constant contact with myself, you're still on your own. You pretty much, everyone gets it, and most of our members go on to be successful traders. So this is what we do at Specialist Trading. And just to give you a little background about myself, I know a lot of you may be saying, well, who are you exactly? I am Steven Primo. I am the founder and the president of Specialist Trading. I've been trading for a total of 36 years now. I first started trading on the floor of the Pacific Stock Exchange. I was a specialist down there. Those are the ones that make the markets and all the stocks, hence the name Specialist Trading. I was a specialist for 9 years for Donaldson Lufkin and Jen Rett. I left the floor in the mid-90s to manage money, to trade my own account, and to also learn about trading all these other markets and to apply what I learned on the floor. I've been still trading all the different markets and all my strategies. Everything I teach and share with you, I actually use myself for my own account. And for my students, I share the same things that I do as well. In the last 5 years or so, I was asked to be Director of Education for a number of sites and give webinars, but I was mainly teaching their systems and their ideas. So 5 years ago, I started my own company, which is Specialist Trading, as you see right here, which just teaches everything, once again, that I've learned in my 36 years and which I personally use myself in my own personal trading. So I know a lot of traders, especially beginning Forex traders, have a struggle because they're new to trading and they don't really have this experience, or they don't really know where to go. The good thing about Specialist Trading is that we shorten your learning curve. It doesn't take you 10, 20, 30 years to get to where you want to be. All the things that I've accumulated in my 36 years I share with you so that we can hopefully really lessen your learning curve so that you can get it all down within 3 to 6 months. Now, here's what I want to talk about today. I want to speak about the right way to trade tops and bottoms. So many traders like to pick tops and bottoms, and I know a lot of traders that are successful trading this way. In fact, this is the way I was trading on the floor when I was a specialist. So I want to show you the right way to trade tops and bottoms, since I would venture to say that the majority of all traders at some time or another are trading tops and bottoms. They feel the currency pair is too low, the British pound has hit support, or there's no way it can go any lower, or the dollar yen is way too high, there's no way it can go any higher, this has got to be a top. So I'm going to show you the right way to trade tops and bottoms. And you can apply this technique. I'm going to share it with you free today. You can apply it virtually as soon as you like. But remember, this is just a technique. It's not a strategy. It doesn't have all the rules and everything about stop placement and exits. But we're just giving you a technique in which you can actually build a strategy off of this. Okay? And some of our strategies at Specialist Trading are actually built off of this technique I'm going to be sharing with you. But before we begin, as always, we're required to show you this. I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this technique I'm going to be sharing with you today. But remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. Once again, we're required to show you this. So as you're taking a moment to view our disclaimer, I'd also like to mention some other things. For those of you who have come to my presentations at FX Street in the past, you know that I love to answer any and all of your questions, but I like to wait to the very end of the presentations. I know some webinar presenters like to take questions while they're presenting. To me, that seems to kind of slow down the teaching aspect, and a lot of times many things that you've wanted or had questions about will be answered in the next slide. So if you happen to come up with a question, please write it down or try to remember it. This won't be a real long webinar, so in roughly a half an hour or so, we'll go through all the questions that you may have. If by any chance you come up with a question once we've concluded, I'll give you an email address as well as a phone number where you can contact us at Specialist Trading, and we'll answer any question you may have about our site or anything about what I presented today or any other things, webinars I've given at FX Street in the past. So we'll answer any and all of your questions, but please wait till the end of today's presentation, okay? It won't be a long time. Another thing I'd also like to mention is if you want more information concerning myself, a little bio on myself, or some more information concerning Specialist Tradings and what we offer, some of our discounts affiliated with FX Street, FX Street is so kindly provided us with a microsite where you can go to. It's displayed on their website, where you can go and simply click on their link, and it will take you to a microsite which gives you a lot more answers about what we do at Specialist Trading. I usually have a slide, and in my haste of putting this presentation together, I forgot to include that slide, so I promise I will have it in a couple of weeks, 2 or 3 weeks. I'll be giving another presentation where I will furnish you with a link. But simply go to the link, and under the my title and name, there's a lot more information with the microsite that FX Street has provided for us. So be sure to go there for more information as well. Okay, with all of that said, I just want to really once again stress that we are an educational site. Even though we provide you with strategies and with signals, my goal is to teach you the same way I was taught how to trade with the Specialist Edge, because I've made no secret about this in the past. My first year as a specialist, I thought I had a license to steal, and I went out gangbusters trying to make millions of dollars, and I actually couldn't make any money. I was just basically trading water. For the first year, roughly, I would basically have some great trades, and then I'd give it all back. And I'm sure this probably hits true with a lot of you traders. You can't seem to get going. You'll have some great trades, and then you give it all back. Well, I came in contact with a few mentors on the floor. These were specialists, and they were able to turn my way of trading around. And they taught me the Specialist Edge, which is really rooted in simplicity, okay? And once again, it's in simplicity and education. So that's my goal. My goal is to teach you the same way that I was taught, with this edge, which is really about simplicity, because in our opinion, it's simplicity that will lead to your success. And the success is not about hitting home runs. It's really about consistency, so that you'll be able to trade the same way I have. 36, hopefully 36, 40, 50 years down the road, you'll still be trading. That's really the true meaning of success. I know a lot of traders that were trading with me on the floor that were totally wiped out and they've lost all their capital. So we never want that to happen. Success is really about coming back another day. Okay, so that's what we want, and we just want to make sure that you're all able to have this consistency with your trading so that you'll be able to be there and you'll be able to trade along with us, okay? One last thing, I just saw a question that popped up about sound. You're still able to hear me, though, correct? I'm not just speaking blankly into the microphone. No one's hearing this. Okay, as long as you're able to hear me. I saw one question just pop up that said, no, there's no sound. Okay, with that said, great. I'm glad the sound is coming, because I'm going to start and give you all this information now. You may want to get out some pencils and paper just to write this down. I believe this may be recorded by FX Street, and it'll be issued in a couple of days, but so you'll be able to go back and reference that. But still, write down the questions. Once again, if you get any questions, this is a great technique for trading the tops and bottoms. And once again, I will be answering all questions once we conclude today's presentation. All right. So let's talk about the right way to trade tops and bottoms. As you see here, the correct way to really trade, and what most people use, is by using an overbought, oversold oscillator. This is probably the best, most frequent, and most popular way to trade tops and bottoms. By using a standard oscillator, mostly of the time it's a slow stochastic or some type of stochastic oscillator. Many times it's the RSI. It's very standard indicators that you can find in virtually any trading software package. You have your overbought and oversold thresholds, and once we get into the overbought area, you simply want to sell or look for some type of trigger or entry to go short. Once we get into the oversold area where we've sold off way too much and where the indicator is now telling us we're in the oversold territory, that's where you want to get in and buy. This is the way conventional wisdom teaches us to trade, and this is what has been used for just literally tens, if not hundreds of years in how you should trade. Now let's look at an example here in the Australian dollar. This is going back to the end of last year and then beginning of 2013 of January. As we see here, we have the beginnings of the Australian dollar on a daily chart, and we've plotted a stochastic here, slow stochastic. And the general rule of thumb is that when the blue line, I believe being the slow stochastic, crosses below, that's your sell trigger right here. So this is where we are in overbought territory. This threshold right here, this blue line is, I believe, 80, and the oversold threshold is 20. So once we cross above there, it's not enough to say, well, we've crossed above, I'm going to go short. We want to see this blue line cross below the red line. Okay, that's your trigger. That's your signal generation that some area, somewhere around here, you should be looking to go short. And here's what happens. It looks great, right? You see this and you go, boy, what a great technique. What a great tip here. And once again, this is the way I traded myself on the floor. As you see here, that now we are going lower, and you had some really nice trade here going short. Guess what? Well, now the oscillator has now moved into the oversold territory, and now the blue line is crossing above the red line. So what is this telling us? Well, now we've hit oversold territory. This is where we should look for some trigger, some type of signal to go long. And guess what? You go long, and it works like magic. It's just unbelievable. You think that you're going to be a millionaire in the next 3 months because everything is working perfectly. And as we've gone up here in the Australian dollar, these are real world charts here going up into January. And you see here, once again, we are in the overbought territory. So we simply wait for the blue line to cross below. And this is our trigger or some type of, we should be looking for something to get a short, which is, once again, we teach this in our classes. And this is usually a proprietary type of tool or some type of pattern recognition or some type of other indicator you use, or just something. This is, once again, what you'll use to actually enter into the trade. And then you go short, and it just works like magic, right? Well, this is actually a great technique. As I stated, I know a lot of people that make money off this. The only problem with this technique is that it works fantastic until it stops working. And then it just is miserable. All right? This is the way I used to trade on the floor. The first year when I struggled, I used techniques such as this, trying to pick overbought, oversold areas. And it would work great 9 times out of 10. It was always that 10th time where it didn't work at all, and I gave everything I had just made back. And over the year I was trading, I had absolutely nothing to show for all my hard work. And I thought, boy, while I was working, I thought, this is fantastic. But then the one time it stopped working, I gave everything back. So this is what is the ideal picture for trading tops and bottoms looks like. This is conventional wisdom. This is what we're mostly taught in books and how to trade. Everyone usually bases their picking tops and picking bottom strategies off of something such as this. But this is the way it usually looks. I want to ask you, does this look familiar? Now, that was the perfect scenario, but this is usually what it looks like. Let's look at another chart here going back to the same time period, the end of December, beginning of January 2013. This is in the dollar yen. Okay, now we have the beginning here of the chart. These are actual real word daily bars here. We see that we go into the overbought territory. So once again, using that technique that works so great on the Australian dollar, we see here that the blue line has crossed below. This is once again our signal, our trigger area to go short. So provided that we've got some type of system or method that tells us when to enter, we would have gone short here, and look what happens. Well, we really don't go higher, but we don't go lower. So what do we see again? Well, we're still in the overbought territory, and we've crossed over again. So why don't we kind of double down? We've been so successful with the Australian dollar. Why don't we short another contract or another lot? Okay, and then look what happens. It's like, well, now I'm committed. Well, this thing is bound to turn around. We've just crossed over again. We've been in overbought territory for weeks now. I'll just sell short one more contract, and this will really I'll have 3 short, lots, but now I'll really make back everything. And then look what happens. Okay? So this is what the problem is with using conventional wisdom to pick tops and bottoms. It'll work great, and I know a lot of people make money off it. I know I made some great money when it was working, when I used these type of techniques, this same type of scenario, until it doesn't work. And when it doesn't work, it's disastrous. You give virtually everything back, and everything you work so hard for. You're counting your money. You're thinking, boy, by this rate, I can buy that new car. I can go on that trip I wanted to. I can buy my wife a diamond ring. I can do all this stuff. And all of a sudden, you give it all back and you've got nothing left anymore. All those plans, all those dreams, I'm sure this sounds familiar, and because I'm speaking from experience, this is the things I went through my first year of trading. Okay? So it was really disastrous. I really had second doubts about whether I was going to be trading much longer, because over a year I had nothing to show for it, and I didn't think I was going to be staying on the job that much longer. So if we want to trade tops and bottoms, and if this is the type of trade that will give everything back, what is the correct way to trade? If there really is a way to trade tops and bottoms, how do we do it? Well, there actually is a way to trade them. And I'm going to share with you what my mentors taught me. They said the reason why most people have difficulty is because they're holding on to this standard notion of overbought, oversold. And they said, Steve, the first thing you have to come to the conclusion with, the first thing you have to own and to accept is that there is no such thing as overbought and oversold. Okay? I'm going to repeat that again. There is no such thing as overbought and oversold. We've been taught that these are standard ways of trading. These are standard scenarios. We're in an overbought condition, we're in an oversold condition. But we know, as we just saw in the previous chart, that currency pairs can go up as high as they'd like to, and they can go down as low as they want to. And they can go down for weeks, if not months. And so if you're trying to look for these threshold levels, you're going to get really wiped out. So don't hold on to these old adages where something's overbought, oversold, because really, in my opinion, they are recipes for disaster. And I know this firsthand. I'm not just saying this trying to tell you what to do. I know firsthand that I could make a dime trying to trade it overbought, oversold. I would make a lot of money and I'd give it all back. So when my mentors taught me about this concept, getting rid of the idea and the notion that something is overbought, oversold, it made my trading a lot simpler. Remember, once again, I explained at the beginning of this presentation, the specialist edge is rooted in simplicity. We're not trying to overcomplicate things. We're trying to simplify. So discard your ideas of overbought and oversold. There is no such thing. All right, so what is the right way to trade tops and bottoms then? I'm sure you're saying, well, Steve, you said there is a right way to trade tops and bottoms, so what is the right way? Well, the right way is simply to go with them. All right? We are not going to try and stand in front of a currency pair that is going straight up and then say, I'm shorting you, you will not go any higher. All right? Or we're not going to stand in the way of a currency pair that is going straight down and then say, I'm going to go long now, you're way too oversold, you'll not go any lower. I mean, that's ridiculous. It's ridiculous. Who are we to say where it's going to stop or where it's going to top out, where it's going to bottom? So the easiest way and the right way, once you see these tops and bottoms, is to go with them, to jump on board. All right? If you were swimming in a river and you wanted to get from point A to point B, which would be the easier way to swim? To try and swim upstream against the current, against the flow, or to try and swim with the current at your back? Obviously, it would be the latter, the second way, right? So we're going to go with these tops and bottoms. Once we see that they're formed, we're simply going to jump on board. All right, so let me share with you what this technique is. Remember, once again, this is where students have a big difficult time here. This is a technique to spot these tops and bottoms. This is not a full-fledged strategy. So please, once your eyes light up when I show you how to use this, do not just simply jump out and start trading it this way today. You have to know a lot more things, which I'll explain about later once you become a member of Specialist Trading. All right, so let's look back at our old chart here. We looked at the dollar-yen when we had a tough time. We initially were told, well, this is where you go short, okay, right here, and then you go short again, and you go short again until ultimately it just keeps going higher, right? All right, so what we want to do with any chart, and remember, we can use this on any time frame. We're just looking at daily bars now, but even if you were looking at hourly bars, at 4-hour bars, if you were looking at 5-minute charts, you could still see the same phenomenon. So I don't want to just make you think that this only applies to daily bars. It applies to any time frame and in any direction. So here's what I want you to do. Regardless of the time frame, regardless of the currency pair, first thing you're going to do is plot a 50-period simple moving average. Okay? That's our first rule. And we want to see that if we're going to go with a top, if we're looking for tops, price must be, regardless of time frame, regardless of currency pair, price must be above the 50-period simple moving average, which it is. You can see here we don't have enough space here in the chart, but we've been well above this 50-period simple moving average going back a long ways. Okay? So we are above the 50-period simple moving average. This means we are looking for tops. Okay? We're not going to look for bottoms if we're above the 50-period simple moving average. We're only looking for tops. And remember, we're going to go with these tops. We're not going to short them. We're going to go with them. Okay, so we've fulfilled the first rule. We're above the 50-period simple moving average. Next thing we want to do is we want to spot all these so-called overbought areas, as we see right here. This is where the threshold or the indicator, whatever we're looking at, is above the standard threshold. For the RSI, it could be something else. For other oscillators, whatever the standard oscillator is for overbought or oversold threshold, that's what we want to find. Now, in this case, we're looking at a stochastic, your standard stochastic indicator. And here is the overbought threshold at 80. Excuse me. So what we want to just do is make sure that we see all these areas where we are in the so-called overbought section. We're not concerned with these levels here where we're below the threshold, as you see right here. We're only concerned with areas where we're above. So once we find these areas, or once we see that we are in these so-called overbought scenarios, what we're looking for is a pivot that is made. In other words, a high followed by a higher high followed by a lower high, which makes this kind of shape as you see right here, high, high, lower high, which is kind of like a V. So we only want to see what those are formated once we're in the overbought area. And so if we look here, we have a pivot high right here. We have a high followed by a higher high, a lower high. And this was all made in the supposedly overbought scenario. Now here's one that was made right here, a high, a higher high, and a lower high, but this was not in overbought, so we didn't categorize that. We didn't mark it. But all the way here, these are all these pivot highs, okay, as we see. So why are we marking these pivot highs? Why are we interested in this? Because these are the places where we want to see that we break above. Remember, there's no such thing as overbought or oversold. Usually, when you get into fifth gear with these scenarios, we break these pivots and go much higher, as you saw. So how are we going to go with it? We'll simply use these as entry points. So in the first scenario right here, once you saw that this was formulated here, this pivot high, you would have made a little mark here on your chart, as we do here. We have a green horizontal line, and just said, once we get above there, I'm going to enter and go long. And this would have been your entry point. So once we trade right at this level, you would have gone long. And so on right here, and so on right here, and so on all the way up. So you see, we're using what people view as tops, but we're looking at them as entry points. We're not going to try and say to the dollar yen, okay, you've gone high enough, I'm going to short you right here because you've been overbought for 3 weeks or 2 weeks. No, that's ludicrous. It's your ego speaking. You're not going with the current, you're swimming against the current. We want to go with the current at our back. So if the current is telling us we're in overbought, most likely we can go as high as we'd like. So we simply want to use these pivot points, these little short-term highs, as our entry. Once we go above, we enter. It's that simple. Okay? Remember, we're just talking about an entry technique here. I know a lot of you are saying, well, where would I place my stop? Where would I exit? Where would I, cover my trade? We're not concerned with that right now. This is just an entry technique. Now let's look at some recent examples. I know a lot of you will say, well, how valid are these scenarios? Do they work a lot? Or, I'm not sure if it works in today's markets. Well, let's look at some recent examples here. A lot of people have been saying, boy, the British pound just keeps going lower and lower. It's starting to bounce a little bit, but, how high are we going to go? Did it reach some type of bottom? We don't care. We're not interested in whether it hit a bottom. I know you see it all the time, and economists and educators saying we've bottomed out, we've hit a top. We don't really care if we've done these things. What we're looking for is just to go on board. We want the market to give us clues, and then we just simply jump on board and go with it. Doesn't matter if it's going lower or higher. We're just doing what the market wants to do. The market wants to go lower, we're selling. The market wants to go higher, we're buying. It's that simple. Remember, my trading was like 99.9% of all traders, and I couldn't make a dime. Once I stripped away all of these things, all of these conventional wisdoms, which my mentors called and labeled useless noise, they said, let go of that stuff. You know, if it works so well, why aren't you making any money? And I simply let go of it, and that's when I started to become consistent. So we're not worried about whether we made a bottom or a top. It doesn't concern us. All we want to do is we want to look at the British pound, and this, I believe, was up until a couple of days ago. This chart is very current. And for all intents and purposes, we're below the 50-period simple moving average, okay? So right off the bat, you know that since we're below, we shouldn't want to buy anything. You know, there's no interest because the currency pair is telling us that it's below its average, so most likely it's going lower. So what we want to do now is look for those so-called areas where we labeled as oversold, where people would have thought we bottomed out. Okay, these are right here. This is the same stochastic that we've been using in the other. It's just very standard. It's on every standard charting software package. All right, so here's your stochastic, and this is the so-called oversold area where people will look for bottoms. Had you done that, you would have really had a tough time trying to pick a bottom in the British pound. Remember, as we stated, this is a recipe for disaster. So the best thing is just to go with it. Now what we want to do is look for those pivot lows. Those are a low followed by a lower low followed by a higher low. All right, all along the way here. So this is all we're looking for. We're looking for this simply type of way to trade going with the flow. I see a lot of people asking questions. Remember, as I stated in the beginning, please wait till the end of the presentation to ask any questions. I know a lot of people like to ask. Just write them down, and I'll get to all of them at the end, okay? All right, so let's look for all those pivot lows were made. As we can see here, we have a low followed by a lower low followed by a higher low. So here's one right here. We have another one, another pivot low. We have another pivot low. And remember, we're only looking for the pivot lows that were established in the oversold area, okay? Because ultimately, if we're going lower, those lows are going to be broken. They're going to be matched, and we're going to probably go lower. So what we're looking for is just to mark these. And as we said earlier, these would have been your sell entry points. This is where the areas where you would have entered to go short. Okay? And you see how this is much more conducive to going with the flow, a much simpler idea than rather trying and pick a bottom in the British pound. I know all these people would say, well, we've come to this support, we've come to this Fibonacci number, we've come to this news that is coming out globally and economically, the British pound should stop. We're not interested in that. Remember, those are all outside sources that all they'll really serve to do is just confuse you. It would have been much easier and simpler and much better on your account had you just gone with the flow, and the flow was telling you, the market, the only thing you should be listening to was telling you, I'm going lower, okay? So just go with it. So as you see here, in this current chart, which was just, I believe, a day old, we are still below the 50-period simple moving average, and if we once again, come back lower and get to this point. This will be another sell entry point to go short the British pound. Now, how about the euro yen? Once again, this thing has been going straight up. So many people have been trying to call the top. A lot of people could have been saying, boy, you know, we called the top here, but then it came a little down and then started to go back up again. What would have been a much better way, a conducive way to being with the market, being in sync, as opposed to trying to pick tops and bottoms? Well, we look here, the euro yen, going back to January, the beginning of the year, as we see here where this dotted line is. Looking back at the beginning of the year, we are above the 50-period simple moving average. This is our buy-sell line. So all we're going to be looking for in this scenario is tops. That's all we're looking for, so-called tops, and we're going to go with it. So we want to circle that area where we're in these so-called overbought sections right here. Okay? Not here. I know a lot of people would say, well, Steve, this is great. I should have got long here. We're not concerned with that. As I stated, that'll work 9 times out of 10, but the time it doesn't, just as we saw in the dollar-yen, you'll give everything back. So why even concern yourself with a low percentage trade? Just go for the high percentage scenarios. And here's another overbought area right here. Okay? So then once we see these areas, we look for the short-term pivot highs. Okay? A high followed by a higher high followed by a lower high. And this scenario right here, okay? So all along, you could have been looking for entries. I know a lot of people would say, but boy, let's see if it eventually went down. Remember, this is not a strategy. I know a lot of you have been wondering, well, where do I exit? Where do I place my stop? This is just an entry technique. We're showing you a proper way to find these tops and bottoms and to trade with them. All right? So as we see here, going back to the beginning of February, this was the last top that would have been made. But then we went into the lower portion of the stochastics. And roughly about a week or so ago, we started to get overbought again, so-called overbought. So we created another pivot high right here. Someone could say, well, why wasn't this circled as a pivot high? Because if we look back down, it wasn't in the overbought territory. We still hadn't gone up above that 80 threshold. But this one was. So this would be your pivot. So if we happen to see the euro yen go higher, this will be an entry point. Remember, we're not trying to pick tops. We're not trying to pick bottoms. How about the euro dollar? Okay, this is the same chart. We're looking back, very valid, gone up to the last couple of days here, starting from the beginning of the year. We see here that the beginning portion of the year, we were above the 50-period simple moving average. All right, and then we crossed over just last month below. So what we would do here is, once we find the overbought threshold and the oversold threshold, we would simply switch over. So this would be your area to go long. We'd have the threshold to go long right here. And these would be your thresholds to go short. Now, the euro dollar is still below that 50-period simple moving average. So there would have been another, even though we don't have it marked here, there would have been another pivot right here, which would be your shorting area. So this is how simple it is. We're just going with the flow. These would be your entry points to enter. These would be your entry points to sell. Now, what is the lesson learned? Remember, this is just a lesson for entry, for learning how to trade tops and bottoms. This isn't a strategy. The lesson learned is never, ever try to pick tops and bottoms. I know a lot of you go to different presentations, and a lot of you have read books, and a lot of you swear by this type of method. Take it from someone who has traded that way. When I traded on the floor, it is ultimately going to lead to losing trades, because as I stated, it's similar to anyone who goes to Las Vegas or goes to gamble and they trade or they play the slot machines. Now, slot machines are designed to give you this false impression that you're making money, so that you'll win every once in a while, so that you'll stay there, because they know the longer they keep you there, you're going to, eventually give all your money away to the slot machine. So what they do is periodically you will get a small winner, and then you think, wow, this is great, I'm doing okay. But if you look over time, and I dare you to do this. Look over time, if you trade your tops and bottoms, how successful have you been? Do you have more money now than you did at the beginning? Do you have more successful trades now than when you started trading tops and bottoms? It's very similar to betting with the slot machines. It'll give you the false impression that you're making money because you've been there a long time, but when you stop playing the slot machine, you'll look and you go, boy, I lost $100. I thought I was making money. It's the same way with picking tops and bottoms. You'll win. You'll have some very nice scenarios every once in a while, just the way I showed you with the Australian dollar. It'll work perfectly. But it'll work perfectly until it stops working, and then you'll give almost everything back. So why trade with a low percentage type of methodology? Trade with something where you're going in sync with the market. Why try to stand in front of a speeding train, such as the euro, such as the euro yen, but more likely the dollar yen, or try to pick a bottom in the British pound? It's silly. It really is something that, it's not conducive to being successful or to being consistent. So the lesson learned here is never, ever, please, try to pick a top and bottom. It'll work up until that time where it doesn't work. As my mentors taught me, and when started changing my way of trading, there is no such thing as overbought or oversold. Okay, there's absolutely no such thing. We've seen currency pairs that just go sky high, all the while being weeks, months in overbought territory. We've seen currency pairs that go straight down for weeks, months, if not years, in oversold territory. So why try to pick a bottom or a top? You'll give everything back, your hard-earned money that you work so hard for. It's not fair to give it all back for trading a methodology that's really rooted in disaster. We don't want to do that. And I really want to help you so that you're trading. As you can see, the attention to detail I give you. I don't want you to give so many traders give away all of their capital in the first 6 months to a year of trading. I don't want that to happen to you. I want you to be trading 10, 20, 30 years down the road. That's our goal at Specialist Trading, to have you trading 10, 20, 30 years down the road. So please remember, there is no such thing as overbought or oversold. If you see something that is tremendously overbought or oversold, go with it. Okay, so points to remember, and I have to stress this. I know a lot of you are asking, well, okay, Steve, I get it now. Where would I place my stop? Where's my target point? These are not strategies. In other words, to have a strategy, you need to have proper rules for stop placement, all right? You need to have proper rules for exit signals. And you need to have money management. You need to know how many lots to trade. Should you continue to buy when it continues to go higher? How many lots do you trade according to your account size? Okay? So please remember, I shared with you a great entry technique today and a great philosophy or concept for tops and bottoms. Some way to change your way of thinking around so that you can, maybe you can construct your own strategy using what I shared with you today. But these are just concepts. This is not a strategy. This is what we provide at Specialist Trading. We provide you with strategies that have full range of stop placement, exit signals, and money management. So if I could just take a moment to talk about what we do, I'm going to take just a couple of minutes to talk about one of our best performing strategies. That's strategy number 4, which is a great strategy that we promote that goes with the trend, that doesn't try to pick tops and bottoms. If you want to become a member of Specialist Trading, we offer a full suite of upwards up to 10 strategies for our full course. But what we're doing for FX Street attendees, we sell individual strategies as well. This is the information you can find on the micro site. Strategy number 4 being one of our best, our top 3 strategies for trading the Forex market. If you become a member, you get immediate online course access. You don't have to wait for anything. You can start getting the rules as early as the next hour. Detailed video instruction, 4 videos. I teach you exactly where your entries and exits and stops should be. You get 1-year trade signal alert, so you'll kind of know and use this as a guideline of where you should be entering, but ultimately you'll be able to spot these signals on your own. 1 year weekly trading lessons, which are supplied in videos. I record a video each week, which gives you a different tip and technique like I shared with you today. Everything's on the PDF, so that if you want, you can copy them and you can print them out and study at your own leisure. And then lastly, you have my personal email address. You have access to me. You can ask me questions whenever you'd like, okay? Now this course usually runs for $695 for all the attendees today at FX Street. We've reduced it down $200 down to $495. And let me just share with you how inexpensive that really is, because I want to show you 2 signals that we generated, that we shared with all of our members. On the 8th, just a little over a month ago, all of our members received the night before a signal to go long the Canadian dollar. This was the buy signal generated on the 8th. Had you used one of our aggressive versions, meaning using the rules to stay in the trade longer, you would have gained roughly about 215 pips being long the Canadian dollar. Here was another signal, once again going with the flow rather than trying to pick a bottom in the British pound. We told our members to go short on the 1st of February, to go short the British pound. A lot of people were saying, no, it's hit support here. We should go long. No, we were saying the market is telling us to go short. All of our members got short. And once again, if you used one of our techniques to stay in as long as possible, you would have gained over 500 pips this last month. Okay? So these are strategy 4 signals. You can see how valuable they are. We understand that everyone doesn't trade the large lot. So if you wanted to trade mini lots, you could have still paid for the course many times over just with these 2 signals you had. So for more information, there's lots of ways to get more information. As I stated, I apologize. FX Street has so graciously provided us with this micro site. Go to their website and they have the link there where you can get more information concerning specialist trading as well as the courses, all right, as well as that discount we have for all of the attendees. Now, if you want to learn more about just the individual courses as well, you can go to our sister site, which is ProTraderStrategies.com. They sell all of our individual strategies, or you can contact our VP of Operations, that's Brett Marsh, at BrettM@SpecialistTrading.com. And here's his phone number, 310-292-7422. Any questions about what I talked about today, we're going to answer right now. But if we conclude today, once we conclude, you can always contact us through this email or this phone number, and I'll answer any question as well. Okay, so let's spend some time here answering some questions. Let me open up the box here, and just let me see exactly what you're asking so I can answer them. Let's see. How do you define the trading goal? Once again, this is from Hytham to all participants. Remember, the trading goal is something that is in the strategy itself. We give you all of that information with strategy number 4. What we just showed you today was an entry technique, so I think I kind of went over that, okay? Raul says your 50 SMA is the master key. Exactly. That is probably our most important technique that we use at Specialist Trading, our most important edge, and that is what we call the buy-sell line. Simply stated, and I'll give you away another important piece of information. I spend whole webinars in this point, but I'll also share with you today the 50-period simple moving average. If, regardless of what strategy you're trading, if price is above, you should only be looking for long signals. I don't care if it's one of my strategies, something that you came up with, or another educator. So many traders will lose money because they're going short when the price is above the 50-period simple moving average, and vice versa. So what you want to do is, if your price is above the 50-period, regardless if it's a 5-minute chart or a monthly chart, does not matter, only look for long signals. If price is below the 50-period simple moving average, only look for shorting signals, okay? Go back and look at your 10, 20 last trades. And if you had losers, I can almost guarantee that it was because you were out of sync with this simple rule. It's an extremely simple rule, but it's probably saved me tens of thousands, if not hundreds of thousands of dollars in my trading career just by simply using this, okay? Mohammed asked, what values do you use for stochastics? Well, this was just your standard slow stochastic. I believe the length is a standard 14, okay? Just the very generic standard indicators. The overbought was an 80. The oversold was 20. And it was with the slow K and the slow D. I believe the slow K was the indicator in blue, and the slow D was the indicator in red, the line in red. But this is just your standard 14-period length for slow stochastic. Overbought at 80 threshold, oversold at 20. Okay? I hope that answers your question. Oh, you're welcome. Let's see. John asked, so you were suggesting trade with the trend. Yes, John. Everything we teach as specialist trading trades with the trend. Here's the problem. Everyone, believes in that, and everyone has heard that adage before. Oh, yes, always trend is your friend. Always trade with the trend. The reason why most people continue to lose is that there are 1,000,001 ways to figure out what the trend is. So one man's uptrend is another person's downtrend. So we at Specialist Trading think that we have the best methodologies, the best tips for deciding what the trend is. And one of them is by using the 50-period simple moving average. But we have a few ways in which we discern what the trend is, and we share them with all our members. You find this out also with our strategy number 4 and strategy number 5. So that's the real secret. Everyone knows they should trade with the trend, but then people say, well, I tried to trade with the trend and I still lost money. It's because everyone has a different idea for what the trend should be. All right? A lot of people like to look at a higher time frame, and that determines the lower time frame trend. Okay? We have our own particular ways of doing that, and it's worked really well for us. So it's extremely simple, and that's how we decide to trade with the trend. So I hope that answers your question. Now this is basically, this technique I showed you is a breakout, but it's breaking out with a trend, okay? Once again, breakouts usually happen when, someone thinks that we've broken out of some type of consolidation or broken out. We're really going with the trend, which is an overbought or oversold type trend. We have found so many times that when something is really overbought, so-called overbought for a long period of time, that's really telling you the trend. Okay? So when you see something overbought for a week, 2 weeks, that most likely is the currency pair telling you that we're in a strong uptrend. We're in no way trying to trade a breakout. We're simply going with the trend. So it comes down to your mindset of what you view the trend as. Okay? Arul says, you learned a lot from me. Well, thanks. I hope, once again, our goal is to teach you. We are an educational site. As I stated, even though we provide all our members, as you saw here, if you become a member of strategy number 4 or any strategy that we promote and teach our students, we furnish you with signals. But that's not our goal. We just don't want you to do that because we see that trading rooms and signal alerts turn into crutches and you don't really learn anything. We want you to be able to spot it on your own. In other words, if you wanted to learn how to golf, I wouldn't golf for you. That really is counterproductive. It's a crutch. It won't help you. What I really want you to learn is how I'll give you lessons on how to golf, and then you go out and play the tournament yourself. It's the same way with trading. I don't want to trade there for you. I don't believe in trading rooms or chat rooms. They're counterproductive because they turn into crutches. You simply start relying too much on the person in the room and other traders and using these outside noises, and they get in the way. Remember, our goal is to keep things as simple as possible. So we teach you how to do it. I hold your hand. I'm with you every step of the way. And then we let you go on your own. Okay? So most of if you do a Google search on specialist trading and on myself, you'll see that there's very few unhappy customers. Everyone is so happy and everyone has gone on the road, hopefully, to success. We're not guaranteeing that, but you can do a search on us and see. I say you're very hard pressed to find people that are not satisfied. Okay? What is your opinion using the 20 period moving average? That's the exponential to spot whether the market is trending. There's nothing wrong with using the 20 period. It's just that it's been my experience in my 36 years that the smaller moving average you use, anything less than 50, should be used for smaller time frames. Should be only used for, say, intraday trading. Okay? As you go up higher in time frames, such as 100, 200, that should only be used for investing, for weekly charts and monthly charts. The best thing about the 50 is that it encompasses all these ranges. So that's why we really use the 50, because it encompasses whether you're looking at a 10-minute chart or a monthly chart. Remember, we want to keep things simple. We don't want to keep changing indicators when we go to a different time frame or a different currency pair. We want to keep everything the same so that you're basically looking at the same thing regardless of time frame and regardless of currency pair. Okay? Neil asks, what of your strategies is this technique based on? Well, this is probably one of our newer strategies. It's strategy number 8 that we are formulating and putting together. This is a brand new strategy that we're putting together for our members. But we also have other strategies that use these very same entry techniques that are involved in this same. In fact, strategy number 4, which I just shared with you, some of the signals and some of the trades, uses the same type of entry technique as well. Okay? So I hope that answers your question. I don't want to take too much time. I know that we have limited time here at FX Street. I want to thank all of you for attending today. I thank you so much. Remember, if you want to learn more about what we do at Specialist Trading or everything that we provide, please go to the microsite. I will be speaking in a couple of more weeks with some more information. I will provide the slide with the link, but if you go on the website, FX Street, they will have it there for you, and you can get more information. Remember, if you want to take advantage of that special that we have that is linked in with the FX Street attendees, we've reduced it down to $4.95. You must contact us within the next couple of days, okay? Here's the information for contacting either our VP of Research and Operations, that's Brett Marsh, Brett M at specialisttrading.com, or you can call us at 310-292-7422. Okay? Thank you so much for attending today. Thank you once again to all the good people at FX Street for giving me the opportunity to speak. I really hope that this helps elevate your trading, and I look forward to all of you becoming members of specialisttrading.com. Thank you so much. We'll see you next time. Bye-bye.